Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Friday the 26th of April 2019. My name's Darren Sinden and you can follow me throughout the day on Twitter by using @DS_Pepperstone. Okay, let's kick off as ever with a look at the overnight changes and price moves to be aware of. Relatively quiet session, I think it's fair to say, on the global foreign exchanges, but still some key points to bring to your attention. First of all, down in Australasia, both the Australian dollar and the New Zealand dollar bouncing back against the US rival. Crucially, the Australian dollar staying above that 70 round number. It did dip, I should say, perhaps below there briefly in trade yesterday morning, but it's held its own here and is up 0.13% on the day. The Kiwi up by 0.27% against the US currencies, so a little bit of stability there in the short term at least. Elsewhere, the dollar was making grounds against other emerging market and commodity related currencies. For example, the Mexican peso, it took 0.1% off of the Mexican currency there. Having said that, the dollar did slide, or slip if you prefer, in Latin America. It was down by 0.98% against the Brazilian real in early trade this morning. The dollar also lost ground against another commodity and emerging market related currency, down by 0.25% against the South African rand, although, as we can see, the rand is still trading well above 14 at 14.37.31 shortly before we recorded the video. Dollar index for its part modestly lower on the day, down by 0.05%, but still up by an impressive 0.8% over the course of the last 7 days. It'll be very interesting to see what some of the key data we have this afternoon does for the strength and momentum in the US dollar. Okay, speaking of the data, what's on the calendar events that may move the markets today? Well, we've already had import, export and producer price index data out of Australia for the first quarter of 2019. A mixed bag, but not terrible, but generally showing that inflation has been weakening, although the export price index data, the one bright spot there, showing a decent rally and well above the consensus forecast. Moving away from data we've had, data that's coming at 06:45, we'll be in France for consumer confidence for April. That'll be a telling number, won't it, with the ongoing Gilets Jaunes protests, and obviously on the back of President Macron's concessions to those protesters announced yesterday. At 8 AM GMT, we have the day's sole central banker speech, this one from the Swiss National Bank's chairman, Mr. Jordan. Be interesting to hear what he has to say. And then at 08:30, we have British Bankers Association mortgage approvals for the month of March out in London. And then at 10 AM GMT, and staying in London, we'll have the CBI, the Confederation of British Industries Industrial Trends Survey, and a look at new orders in the country for the month of April. We pause then until 12:30 GMT and cross over the Atlantic for the highlight of the day's data, GDP, the preliminary read for gross domestic product for the first quarter in the US at 2019. 1.8% was an expectation that I've seen, although the calendar here has got a slightly different set of forecasts. I note that the GDP now model has ticked down to a forecast of 2.7% on an annualized basis for US GDP. So let's see how that figure falls in line relative to what's gone before, Q4 2018, of course, the most recent release. But also don't forget to take a look at personal consumption and expenditures, because the US consumer accounts for the vast majority of US GDP when all's said and done. Okay, then at 1400 we stay in the States for the Michigan Consumer Sentiment Index for the month of April, and then pause until 1700 when we'll have the release of the influential Baker Hughes US oil rig count, a look at the number of active drilling rigs operating in the USA. And then at 1930 you can round off the week with a look at the commitment of traders reports as released by the CFTC, data of course collected this Tuesday. Okay then, breaking news and comment that's caught my eye overnight. First of all then, Japanese industrial production declined at its fastest pace since 2015 during the month of March, falling by 0.9% versus forecasts for just a fall of minus 0.1% and February's previous reading of plus 0.7%. What's interesting as well is if you look down into the data, how sharp some of the swings into a contraction were in sectors like machinery orders, which had a sort of 12 percentage point swing from positive to negative, and that's another headache for the Bank of Japan and Shinzo Abe. Staying in Asia, Kim Jong-un, the leader of North Korea, has said that peace on the Korean Peninsula depends on the US attitude, and said that the US acted unilaterally and in bad faith at their recent summit. Meanwhile, Spain is preparing to head to the polls on Sunday. This is the third general election in the country over the last 4 years, and as many as 25% of voters are undecided about who to vote for, according to pollsters. So though we're having an election, it may be that we don't actually have any resolution after Sunday's polls have closed. So let's see what happens there. Food for thought then, something to take away with you into the trading day and beyond. Why not think about this? There has been much talk recently about the role of semiconductors, or silicon chips if you prefer, as a leading indicator for global growth, with the Philadelphia SOX index having added 30% in 2019. The omens for growth were good, and you can see the performance of the SOX index here in the blue line on the chart to our right. However, Intel, ticker INTC, a significant component of the Philadelphia Stock Exchange Semiconductor Index, warned on revenues last night, and their stock fell by 7% after hours. The question I want to ask here then is, have we now seen the top of the bull market? So this chart here, as I say, plots the Philadelphia Semiconductor Index, and I decided in blue, and I plotted against the S&P 500 index in green. And as you can see, we have got some divergence here, with the SOX index selling off, even as the S&P sort of flatlined somewhat. So let's keep an eye on that, and if you know, the talk of the SOX being a leading indicator is correct, then the direction of the SOX could well lead the direction of the S&P 500. Okay, it's risk warning time. Please do take a moment to read this risk warning, as trading CFDs and foreign exchange on margin can be a risky business. If you're uncertain about those risks or the suitability of leverage products for you, then please do contact your Pepperstone account representative. And as I say, do take the time please to read this risk warning thoroughly. Thank you for your time today.